Hello and welcome to Free World Investing. Today we're going to be going over trading with Bollinger Bands. Now I just have this set up. I haven't really looked at this chart too much, but I'm going to explain Bollinger Bands to you really quick. Bollinger Bands take a moving average. In this case it's 20, which is the default setting for Bollinger Bands. And then it adds standard deviations to them. The blue lines are the standard deviations. It's a standard deviation of 2. So in essence, what it's doing is it's showing the overbought and oversold areas for that moving average. So everything that's here overbought, everything that's here oversold. Now, this works sometimes and not always. So sometimes it's good to have a confirmation indicator along with it, something like RSI or something like that. And then this also takes into account volatility. So you can see right here, when the bands get bigger, the bands are the blue ones, and there's more area, that means that there's been high volatility for that area. And when it squeezes, that means there's been low volatility. And whenever there's been a low volatility for a long time, there's a good chance that there's going to be a breakthrough. So we can see right here, low volatility, boom, down. Low volatility right here, boom, up. Low volatility right here, boom, up. Low volatility right here, boom, down. Low volatility right here, boom, up. So on and so forth. Now the big thing is when you're in a ranging market, the overbought and oversold areas normally work perfectly. Like right here, this is a good range area right here. Like as soon as it came up, boom, down, boom, up, boom, down, boom, up. But then once it starts entering the trend again, is when you get some convoluted messages from the indicator. So it goes right back up to this uptrend, which you can see that it was uptrending from right here, and it kind of just broke away for a little bit. We'll add like a little trend line so I can show it to you. So this would have been the trend line at one point in time, and then once it went down, it would have gone back down here, and so on and so forth. And you can see where it was trending. But once it hits the trend, then a good spot becomes the moving average line itself. The moving average line itself will then become kind of a support line if you're trying to get mini trades along the whole way to maximize your profits. But then once you get like a serious breakthrough, we can see the breakthrough right here, then that's also a good sign that the trend might be reversing once it's on the trend. So that's a good thing to look out for. Like we can see right here, the trend, boom, this is when it first enters that downtrend. It goes down, boom, then goes back up, and then since it's cleared the moving average, it's a good sign that it's going to be moving up. And you want to wait a little bit for a little bit of time for it to be over. So like right here was a good sign that it might be heading towards a up position. And boom, boom, boom. And then this one you would have got like a little bit convoluted right here, but because at this point it looks like it looked like it might have been going down on the downside. So you would have had wanted to put a stop loss on some of these, of course. But you could easily see where it bounces off and where you could have made a lot of really good trades. And I'm looking at, like I said, this is the hourly chart, but we're looking at days at a time on this. So once again, downtrend, boom, hits that moving average, hits that moving average. Once it comes through, bam, huge upswing. See, and like right here, it wasn't a massive amount, and we could see the volatility had decreased because the Bollinger Bands had just gotten smaller, and then we got that huge influx of volatility. And a good trade around here, like I said, would have been right around here, and you would have been closing out from the trend that would have been from up here or right here on the downside, because you would have gone for the downside right here, and once you see this huge bounce on the EMAs, you would have wanted to stick through that trade until about right here, just in case it would have gone farther on the downside. Now you could have easily put a good stop loss right here, a good stop loss for going above 10 to 20 pips depending on the volatility of the market at the time. We can see right here, right here probably would have been a good about 20 on there. And then right here, we would have had a good setup where it would have been about if you would have been going for the downside again, good 20 probably would have been good right there too. 20 is a pretty good average, so you would have probably exited the trade around here. You would have scored a decent amount of pips, or you could have just consolidated right here. This would have been an excellent place to consolidate, but hindsight's 2020. There's a lot of ways to trade the Bollinger Bands, and a lot of it is just practice, and you can use other indicators, like I said, to kind of confirm the trend. And confirming the trend is a big thing when using the Bollinger Bands because, like I said, the moving average definitely becomes a good support line. But that's really the basics of Bollinger Band trading. If you have any questions, make sure to leave a comment, and if you like this video, please give it a thumbs up and subscribe to the channel. Thank you very much. You all have a good day. Check out my other videos.